Right, welcome back to webinar series again. We have been discussing the auditing flow. Today is another important the step in auditing, audit finalization, one before our final conclusion of audit reporting. So I request you before coming to this step in auditing, so please watch webinar number 1, 2, 3, 4, 5 and come to the session. Quickly we will see the flow of the auditing and we'll come to the discussion. So if you see here, I'm going to discuss the audit finalization part A, subsequent event, and part B going concern. I will link you so how this is coming. So as I explained the previous webinars, so we have been discussing on part E, fundamental of audit and assurance. The 40 marks we have discussed from webinar number 2, 3 and 4. So today's discussion basically focusing about fundamental of audit and assurance 40%. In that 40%, so we have discussed the 12 risk assessment, chapter number 12, chapter number 13 audit planning and documentation. I told you that I didn't discuss, but I explained you in summary in auditing flow. Chapter number 14 audit evidence and audit procedures in detail I discussed in the previous webinar, and I'm going to discuss today chapter number 15 audit finalization and reporting. It's an important area in your syllabus, because if you can see the pilot paper, mock paper as well as the revision kit, there are many questions from this section, and also it is not difficult like risk assessment. You can scope, right? I'll tell you the art of thinking today. And if you look at this chapter 15 audit finalization and reporting has basically 5 areas. Number 1, subsequent event, going concern, written representation, overall review of the financial statement at the last stage of auditing flow, and the auditor's reports is another important area. So if you divide this into the auditing flow, which I have explained during the previous webinars, so this first 4 areas, subsequent event, going concern, written representation and overall review of the finance statements, these 4 sections are coming under the audit finalization, right? And on the auditor's report, if you see, that is the last step in auditing flow, that is auditor's audit reporting. So today's my discussion is basically, this webinar will have a part A and B. So I will be focusing on audit finalization. I will not have a time to discuss all the things because I have only 2.5 hours to go. So during this 2 hours to 2.5 hours, I will be trying to cover it up, the subsequent event and going concern section of the auditing flow, which are one of the important areas that you should aware as the practical auditor as well as the auditing student, right? So if you look at the type of question before moving to the today's discussion, this is one question I extracted from the revision kit, question number 15.3. Just read to understand what type of question that would come in your examination. Basically, you know, our BL5 paper is a 2 hours paper into the 50 marks MCQ question. So MCQ questions are not easy like normal essay typing question. Some people say that, you know, some students think that MCQ ne ඉරි ගහන්න තියෙන්නේ කොමාරි මොකක් හරි කරගන්න පුළුවන් කියලා හිතනවා. But it is not the case, because the MCQ questions are the mode of question that is most difficult in this world in any examination application. Just quickly read the question. Which of the following statement describe the auditor's responsibilities for events occurring after the year end but before the date of the auditor's report? Basically, there are 4 answers given by the examiner. The auditor has no responsibility to consider events that have occurred after the year end. The auditor only has to consider adjusting event, because non-adjusting event do not need to be reflected in the financial statements. The auditor is responsible for carrying out procedures to obtain audit evidence that all events occurring after the year end and before the date of the auditor's report, which need to be reflected in the finance statements, are identified. The auditor only has to consider events occurring after the year end which occur between the date of the auditor's report and the date of the finance statements are issued. It's a long question and the long information. If you don't know the theory, you can't answer to this question. But if you know the theory, this is a very straightforward question, right? Then if you look at the pilot paper, another question from pilot paper, question number 36. Which two of the following are potential indicators that an entity is not a going concern? Number 1, current liabilities have exceeded the current asset. Number 2, one customer from a large customer portfolio of the company has become bankrupt. The banks have disagreed to renew borrowing facilities. Inland Revenue Department has issued a material assessment to the company. Right? As I told you in the previous webinars, so the practical application of auditing theory in BL5 discussion is not that extensive, but if you look at this type of question, always theory is linked to the some type of practical scenario. So therefore, when you are learning the auditing principles, auditing theory, of course you have to remember with the example that you are learning in theory discussion, right? I am going to tell you a lot of example today as well in the practical life of auditing. So try to understand with those practical scenarios. Try to understand the theory using those practical scenarios, and also apply that knowledge by practicing many questions given in the revision kit as well as the pilot paper and the mock paper. Right. So look here. So let me quickly take 2 to 3 minutes on to show you the auditing flow where we are, where this discussion is coming under the practical auditing flow, which I have been drawing with you from the first webinar. So you need to have a proper understanding where we are and why we are discussing this one, right? So if you can remember, I won't take that much of time. If you can remember our basic diagram of auditing, the management is preparing the finance statement and giving to the shareholders, right? And the shareholders do not trust the management. Therefore, shareholders are going and appointing a third party person called practicing chartered accountant to come and check this finance statement which is prepared by the management. That is simply called external auditing, which we have been discussing now, right? In this auditing flow, I explain you 100% certification. 100% certification cannot be given, which I explain you, right? How this certification, how this chartered accountant should give the certificate to the shareholders on the finance statement prepared by the management is given under the Sri Lanka Auditing Standards, which we have been discussing, right? Under that, the number 1 step that you want to aware is agreeing terms. Agreeing terms, right? That means which we discussed, agreeing the conditions, agreeing the scope, agreeing the objective that the 2 party or a tri-party are going to do, right? And then I told you, so then auditor comes to the audit planning section. Audit planning section. Under the audit planning section which we discussed, if you can remember, number 1 step, understanding the business. Understanding the business is the first step in audit planning, and then we discuss these things, risk assessment. I hope that you can draw this flow now without me. And after risk assessment, deciding risk response. So I am sure that, right, this is basic principles. Right. I am sure that you can draw this auditing flow. Now, tri-party relationship 100% cannot be provided, auditing standard, agreeing terms, coming into the planning, understanding the business, risk assessment, deciding risk response. We have discussed. If you have not watched, go back and webinar number 2, 3, 4, you have to see. Right. Then last webinar we discussed audit procedures, right, or is response is our next step in auditing. Basically, if you can remember, where we discussed in the last webinar, I told you, I'll come here, right. I divide this into theory, sorry, this audit procedures, the last webinar, we divide this into two, right. One is theory discussion and other one is practical audit procedures, right. That was our last discussion. So that means auditor is appointed by the shareholder, basic groundwork is put here, then auditor plan the work, identify the risk because auditor cannot do the 100% verification, then auditor comes and do the work, that is called audit procedures. The last webinar we discussed theory part, theory behind the audit procedures and the practical audit procedures. When I am discussing practical audit procedures, I told you we have to look into three things, right. One is we call account balances. How to audit account balances, how to audit transactions, how to audit disclosures, right. How to audit account balances, how to audit transactions and how to audit disclosures I explained in the last webinar. So in this account balances mean it covers statement of financial position, statement of comprehensive income here, and the disclosure part it covers in the all over the place of the financial statement. If you look at the account balances, I told you all the balance sheet item or a statement of financial statement position items are covered. Basically, property, plant and equipment, investment property, inventory, debtors, creditors, then deferred tax, stated capital. Likewise, all the items that are available in the balance sheet or a statement of financial position are audited by the auditor through using this under the account balances. As a BL5 student, you are not required to know about all the practical audit procedures, but you need to have a very basic understanding. If I tell you property, plant and equipment, land deed, what should be done, you need to have some basic understanding. If I ask a question, okay, if there is a bank balance in the books of accounts, what is the best audit procedure that the auditor should perform, you need to have a basic understanding. I told you the last week confirmation would be the best procedure. And also in this theory discussion, I told you one important thing that you should aware is assertions. Some people, the students who are learning of the auditing, if you get fed up with this auditing word and if you are not interested, you will not understand anything. So you have to make it understand. So what you need to do is you have to learn these auditing principles in a flow and trying to understand how practical audit is done and why this audit is done, what is the purpose behind of this. On that manner you need to understand. If not, this is going to be very boring and one of the hating subject. That's going to happen. ගොඩක් අය auditing කරනකොට මේක තේරුම් ගන්නේ නැහැ. ගොඩක් අය auditing කරනවා අර සාමාන්‍යයෙන් තවත් theory subject එකක් කියලා study pack එක අහුවාන කෑල්ලක් කියවනවා. දැන් මුල අගක් නැහැ. audit planning එක අරන් කියවනවා. ඊට පස්සේ reporting කියවනවා. එහෙම බෑ මේක. මේක flow එකක්. මේක practical work එකක්. එතකොට අපි මේක flow එකට ඉගෙන ගන්න ඕනේ. මේක flow එකට ඉගෙනගෙන මේ flow එක හොඳට මතක තියාගන්න ඕනේ. මේ flow එකේ පියවරෙන් පියවර යනකොට අපි හිතන්න ඕනේ ඇයි මෙහෙම එකක් එන්නේ. දැන් කෙනෙක් අවිල්ලා audit procedures ඉගෙන ගන්නවා assertion දන්නේ නැතුව. audit procedures කටපාඩම් කරනවා audit procedure එකක් කියන්නේ මොකක්ද කියලා දන්නේ නැතුව. audit procedure එක purpose එක මොකක්ද කියලා දන්නේ නැතුව. මොකක්ද purpose එක? purpose එක තමයි මේ chartered accountant එයා මෙයා මේ මූල්‍ය ප්‍රකාශන මත මතයක් කොටස් හිමියන්ට දෙනකොට එයා ඒ දෙන මතයට පදනම් වෙන්න යම් කිසි සාක්ෂියක් තියෙන්න ඕනේ. අනේ ඒක නිසා තමයි අපි audit procedures කරන්නේ. මේවා check කරන්නේ. මේවා check කරන්නේ ඇයි? මේවා check කරලා අපි ළඟ සාක්ෂි රැස් කරගත්තට පස්සේ තමයි අපිට කියන්න පුළුවන් මේ මූල්‍ය ප්‍රකාශන හදපු මූල්‍ය ප්‍රකාශන සත්‍ය හා සාධාරණයි කියලා. Then only we can say this finance statement prepared by the management are free from material misstatement or true and fair. So if you look at the transaction, you know, this is income, revenue, expenses, any other expenses, salary, income tax. Likewise, all the items that are available in the statement of comprehensive income are audited or are coming under the transaction which are audited by the auditors during the audit verification, right? And the last one is a disclosure. This is account balances, this is transaction, and this is disclosure. In this disclosure, mainly you can have these disclosures. Going concern, you see, going concern is a disclosure, and subsequent event is a disclosure, right? Related party transactions is a disclosure. Capital commitment, contingent liabilities, depreciation rate, fair value hierarchy. Likewise, there are many disclosures in the financial statements which auditors are not going to check everything, but auditors are going to check important thing or a material thing. So therefore, when you look at this financial statement which is prepared by the management, has three things as I explained there: account balance, transactions, and disclosures, right? That mean, what is that meant by auditors are conducting the audit? Mean auditors are gathering the audit evidence in terms of account balance, transactions, and disclosures. Therefore, as an auditor, you need to aware what are the audit procedures or what is the work that the auditor should do to gather the audit evidence on all these account balances, all these transactions, and all these disclosures. That is what we call simply auditing. So now in our study text, these are not discussed in detail because there will be a separate section, the 8 chapters or about 500 pages study text only on this section in your corporate level 1 subject, right? So therefore, that is not discussed in that detail, but you need to have some understanding onto these audit procedures. Why I am telling, you go to the pilot paper, mock paper, there are a lot of practical scenarios given. For example, cash and bank, debtors, income, subsequent event. Likewise, there are few matters that you need to aware. So I told in the previous webinar, so therefore having this practical understanding onto this, how to audit in these areas will be very much useful for you at examination. So you don't have to have a knowledge on all this area, but at least from each and every line item, at least key 2 audit procedures, main 2 audit procedures remembering will help you to write any question that are coming in your examination. But in your study text, you can't get like that. So I told you that I have prepared a small summary onto all these sections. What are the key audit procedures? What are the main 5 audit procedures I have prepared for CL1 students? I told you, so you all also you can see that document, but not to memorize, just to read and to get an understanding. Inventory mean inventory මොනවාද කරන්න ඕන, debtors නම් මොනවාද කරන්න ඕන කියලා දලා අවබෝධයක් ගන්න ඕන. එච්චරයි. Right? I have shared that into social media, so you can download and take from the social media, Facebook. So that is available just to have a rough understanding only, right? If you think that is not necessary, don't look at that one, just look at the study text. That also enough for you to get through the examination, right? Right. Now today's discussion, so last week we discussed the theory, last webinar, and the practical audit procedures we discussed in summary, and the account balances, how to audit, we discussed in summary. Transaction also we just discussed, we just touch how to audit in summary, right? So our next step, let's see, you are basically auditor is appointed and basic understanding of the auditor, and then your auditor is coming and planning the work under the audit planning, which under the risk assessment. Then you are coming to and performing the audit. So you are performing this chartered accountant come and do the audit, and gathered a lot of evidences on account balances, transactions and disclosures. Now what is your duty? Your duty is to give the report. You have collected the evidences, now you give the report. Last step in auditing is giving the report. Right. Right. Last step is in auditing is giving the report. Right. So now today's discussion what would be, so now this basic is over, planning is over, audit procedures is over, our next step is going to audit report, that will be the next webinar. But before going to the audit report, the two important areas you should aware. That is, generally I told you generally auditors are not looking at everything, but generally auditors are looking at the material important items. There are certain things which are fundamental in auditors or which are fundamental in audit verification. ඒවා අනිවාර්යෙන් බැලිය යුතු දේවල් ටික. අපි කියන අර මූලික දේවල් ටිකක් කියලා. ඒ වගේ මේ audit procedures කරගෙන යනකොට account balances, transaction, disclosures වල there are two important areas, highly examinable area where the examiner could touch, right? That is these two areas. Going concern and subsequent event. Before moving into the audit report, I am going to discuss today in detail how to audit the going concern assumption of financial statement and how to audit the subsequent event, in other terms event after the reporting date as required by LKS 10. So these two areas generally auditors are looking from at the beginning, especially at the finalization of the audit. What is meant by the finalization? So now you are appointed and you are planning the work and you have done the work. Before giving the audit report, you have to finalize the work that you did. කරපු වැඩ ටික ඔක්කොම compile කරලා, partner review කරලා, manager review කරලා, ඊට පස්සේ quality control partner දාලා, ඊට පස්සේ තමයි අපි audit report එක දෙන්නේ. ඒ audit report එක දෙනකොට අපි මේ තොරතුරු ටික එකතු කරනකොට අපි කියනවා finalize කරනවා කියලා. ඒ කියන්නේ දැන් සාමාන්‍යයෙන් how that is happening in the practical audit firm එක මම කියන්නම්. දැන් සාමාන්‍යයෙන් අපි audit team එක තුන් දෙනෙක්ව audit field එකට යවනවා. 4 දෙනෙක් යනවා 5 දෙනෙක් යනවා නම් depending on the complexities and the size of the organization. ඊට පස්සේ යාලා ගිහලා audit evidence gather කරලා working paper file, box file or electronic file එකක් හදලා අරන් යනවා office එකට. ඒක අරන් ආවලා manager මේක finalize කරනවා කියලා කියනවා. මොකද්ද කරන්නේ? manager ඇවිල්ලා මේ working papers බලලා senior එක්ක discuss කරලා staff එකත් එක්ක බලලා issues address වෙලාද කියලා බලලා ඊට පස්සේ ඒ file එක ඔක්කොම check කරලා partner ට දාලා partner accounts go through කරලා මෙන්න මේ process එකට අපි කියනවා finalize කරනවා කියලා. This is called finalization. So when you are finalizing this audit, normally auditors checking so many things, partner level, manager level checking so many things. Out of that, there are two important things that is coming under this: disclosures, going concern and subsequent events. So therefore, I thought of in this webinar discussion for me to touch all highly examinable areas. Accordingly, I have selected these two areas. It could be tested in your examination before going to the reporting. Otherwise, my next step is directly going to the audit reporting, but I am not going. I am going to discuss these two areas, and next webinar I am going to go to the audit report. Right. So this is how the today's discussion is located. This is how the today's discussion practically coming under the auditing flow. This is how this today's discussion will be tested in your examination, right? I hope that you are clear that where we are now. Right. So let's have the press discussion today. that is subsequent event, right. Be relaxed. If you are doing something else as of now and you are watching this webinar doing something else, please stop that. Or if you are so busy, just pause the video and do your work and come and watch this one. So this 15 to 20 half an hour time. If you listen carefully, this is a separate auditing standard. No need to look at even any book, right. What you can do is the short note you can put in, you can write with me in a short note, booklet or some paper, and that is more than enough for, no need to look at that study text, that particular chapter that is coming under chapter 15 part A. So it's a very simple if you understand, right. So before moving to the discussion of the auditing standard, but I will just tell you what is meant by subsequent event. Subsequent event, what is that? Subsequent events, subsequent events, or we sometimes we say another word called events after the reporting date. Event after the reporting date. Events after the reporting date. So you might have heard this word during when you were doing your advanced level accounting paper. So events after the reporting date, this is a separate accounting standard, that is LKS 10. LKS 10. Right. So if you can remember in your A-level discussion, let's say the financial year is commencing on 1st April 2019, right. Your financial year is ended, let's say 31/3/2020, right. So this particular year we call 2019-20 financial year. Am I correct? This is fundamental in your accounting. So then what you do throughout this particular year, whatever the transaction that occurred are accounted using the double entry system. මේ වසරක කාල පරිච්ඡේදයක් තුරාවට සිදුවෙන ගනුදෙනු දිත්සටහන් ක්‍රමය හරහා අපි කිනුම් ගත කරනවා මූලික පොත්වලට. මූලික පොත්වලින් ලෙජරයට. right. ලෙජරයෙන් ශේෂ පරීක්ෂමට ශේෂ පරීක්ෂමෙන් අවසන් මූල්‍ය වාර්තාවලට. So we account that into the books of accounts. End of the day, now after you prepare all these ledgers, and end of the day you take a trial balance. From taking a trial balance and to prepare the financial statements, it takes few days. When the financial year is ended by 31st March 2020, 1st April 2020, you can't get rid of the entire accounts. There are so many year-end adjustment has to be made. For example, inventory adjustment, provision adjustment, deferred tax adjustment, income tax adjustment. There are a lot of accounting entries has to come after the year is ended, right? So then let's say, so this financial period accounts, I'll draw here, the accounts were ready, that means financial statements were prepared by the management and it was ready by 30th April 2020, right. And then what happens? So these are given for the auditors in this particular date, auditors to audit. Auditors take some time. It may be 1 month, 2 months, 2 weeks, 3 days or whatever, depending on the complexities and all that, auditors may decide how many days it is needed. Let's say it is given for the auditors and auditors have requested 1 month time to sign off the audited finance statement. So that means 30th May 2020, right. So this is the reporting date. Listen me carefully. This is called reporting date, right? Then this is management accounts date, management finance statement date, right? And this is the auditor's, this is the auditor's report date, right? Then what happened there? Okay, now auditors are sign the finance statement. First of all, the director should sign, those charged with governance should sign. Then the auditors sign the finance statement. Once the auditors sign the finance statement, it is not immediately given to the shareholders. It is represented at the annual general meeting, right, AGM. So what happened? When the finance statements are signed, let us say 15th of June 2020, it is given to the shareholders. We call finance statement issue date, issued to the public. You see, there are different dates now. You have to have a very good understanding on these dates. I will tell you why after this discussion. The 1st April 2019 to 31st March 2020 is the financial year which is under review, that is called 1920 financial year. Then reporting date, the management takes some time to prepare the finance statement, do the final adjustment and do prepare some trial balance and all that takes some time. So let us say the management is taking 1 month time. There are some companies in Sri Lanka, in the world, even within 2 days they will prepare the accounts. There are companies like that. So I have taken a 1 month. That is called, the management has prepared the finance statement and given for the auditors to start the work. That is called draft finance statement. Then auditors are taking a 1 month time to sign off the finance statement, check and correct and pass the journal entry, gather the evidences, argue with the management, classification changes, disclosures. There are many things the auditors are attending or recommending. Then the auditors' accounts are finished. Then the management will sign off the finance statement and auditors will issue the auditor's report on the finance statement certified by the directors. Right. Even though the audited finance statements are available now, it is available with the directors, but it is not available immediately to the public. It takes some time because AGM has to have, annual general meeting should be organized. So now AGM date, or there will be a date according to the SEC or a Colombo Stock Exchange. That date is called, the finance statement are issued to the public. It can be within a day from this one or within a 1 month depending on the legal background of the particular company. So then finance statement are issued date to the public and then it is available for the public, anyone to see. In between this period, audited accounts are available only for the shareholder, those charged with governance. If necessary, audited accounts can be published on these 2 dates, can be the same day also if necessary. But generally, practically, there is a timeline. Now, what is our discussion here? The subsequent event. පසුව ඇතිවන සිදුවීම්. වාර්තා කරන දිනෙන් පසුව ඇතිවන සිදුවීම්. Subsequent event mean that is a auditing terminology. Event after the reporting date is accounting terminology that you have to have a good, right, separate auditing standard. We have SLAuS 560. So we don't say the event after the reporting date in auditing, it is accounting. Subsequent event, that is the auditing terminology that you shall remember, right. So now all these incidents, if there is any event or an incident that take place after 31/3/2020, right, any incident that could take place which could affect the finance statement prepared by the management, we call subsequent events or events after the reporting date. For example, there was a fire. අපේ ස්ටොක් එක අපේ තියෙන ඉන්වෙන්ටරි ස්ටොක් අපේ ස්ටොක් එක ස්ටෝර් එක ගිනි ගන්නවා. හැබැයි මේ ගිනි ගන්නේ අපි තමකෝ let's say it before the audited accounts are certified somewhere in this point. Now you have to think whether this incident will have an effect on the finance statement prepared by the 31st March 2020. And ඒක අපි analyze කරන්න ඕන. Right? ඒක නිසා all the incidents that are happening after the financial statement date, not only up to the auditor's report, right, in auditing definition, even after that, from the financial reporting, if there is an incident, if there is an event occurred or happened after the financial reporting date, for those period, that is what we call subsequent event in terms of auditing, event after the reporting date in terms of accounting standard. Right? So basically, now that I am coming to the accounting now, that is nothing to deal with auditing. In accounting, you might have learnt in A level. So any incident happening after the reporting date, we call event after the reporting date, has two types of thing. One thing, you know this one, has two types of thing. One we call adjusting event, other one non-adjusting event. ඒ කියන්නේ වාර්තා කරන දිනයෙන් පස්සේ විහාකි සිදුවීම් ඕන තරම් වෙන්න පුළුවන්. ගිනි ගන්න පුළුවන්, නායකයෙක් වුණත් වෙන්න පුළුවන්. එහෙම නැත්නම් it could be something major restructuring of a company, the COVID-19 non-compliances, legal cases can be filed after 31st March. The inventories will not be able to sell. Right? Any incident that could take place after the financial reporting date. Now, as far as the accountant of the company need to see that incident happened after the reporting date, whether that will have an impact on the finance statements which are being finalized. වාර්තා කරන දිනයෙන් පසු ඇතිවන ඕනෑම සිදුවීමක්, ඒ සිදුවීම හරහා අප විසින් පිළියෙල කරන මූල්‍ය ප්‍රකාශන කට්ටලයට යම් බලපෑමක් තිබේද? බලපෑමක් තිබේ නම් ඒ බලපෑම මේ මූල්‍ය ප්‍රකාශන වලට ගලපන්නට සිද්ධ වෙන්න පුළුවන්. එහෙම නැත්නම් හරිදරව් කරන්නට වෙන්න පුළුවන්. There could be incident after the financial year is ended. Such incident could be either adjusting event or a non-adjusting event. Adjusting event mean what? It has to be there will be a figure changes in the finance statement prepared for the 1920. The amounts will change, which we have reported on 31st March 2020. Non-adjusting event, there is no impact to the figures what we have reported on 31st March 2020, but it may be a disclosure, it may be additional disclosure as far as the matter or event is concerned. Right? I am sure that you have a very thorough understanding in terms of accounting of these two principles, adjusting event and non-adjusting event. Right? So if you look at the adjusting event example, let's say debtors, right, bankrupt of a debtor. Example, let's say impairment of debtors. That's easy, your technical word. Impairment of debtors. What it is? Let's say there was a debtor on 31st March 2020 into 1,000 million, 1 billion rupees. There was a debtor of 1 billion. When it comes to 30th of April, management comes to know that company, that debtor has bankrupt. Oh, the debtor is not in a position to pay back us the money. So then, before the finance statements are prepared with the sign off, the accountant knows that this particular debtor is not recoverable. if this particular data is not recoverable, but we come to know not before the 31st March but after the 31st March. It is an incident that occurred after 31st March. But that incident gives you a further evidence. The bankrafting of a debtor giving you a further evidences on the balance which was there in the 31st March. ශේෂපත්‍ර දින නැත්නම් වාර්තා කරන දිනෙන් පසු ඇතිවන මේ ණයගැතියා බුන්වත් වීම කියන සිද්ධිය 330ක වාර්තා කරන දිනේ පවතිච්ච ණයගැතියන් සම්බන්ධයෙන් ණයගැතියන්ගේ තත්ත්වය සම්බන්ධයෙන් තව දුරටත් සාක්ෂි සපයන සිදුවීමක්. If such incident provide further evidences on condition of that particular asset existed on 31st March 2020, that is called an adjusting event. I hope that you are clear. Right. Example for a non-adjusting event: fire, gini ganno. Right. Let's say 31st March 2020 we had 100 million stock in our inventory. Unfortunately, the 16th of April, in a sudden fire comes out in the factory or the store, the entire 100 million got damaged. When this entire 100 million got damaged, we know we had 100 million stock on 31st March 2020. Whether the loss arise because of this fire subsequent to the reporting date, whether that entry or whether that loss should be adjusted on the 31st March 2020 accounts. Adjust කරන්න ඕනද නැද්ද? මූලික සංකල්පයක් විතරයි බලන්න ඕනේ. මොකද්ද මූලික සංකල්පය? මේ පසුව ඇතිවන සිදුවීම හරහා වාර්තා කරන දිනේ පැවති වත්කම් වල තත්ත්වය පිළිබඳව තවදුරටත් සාක්ෂි සපයනවාද? මේ ගින්න ඇති වෙන්නේ 330 ගෙන් පස්සේ. ඒතර ගින්න සහ මේ අතර කිසි සම්බන්ධතාවයක් නැහැ. ඒක නිසා it's not, therefore it is not adjusted. It is not an adjusting event, it is a non-adjusting event. But it will be an important information to the user who are reading the finance statement to know that there was a fire occurred after 31st March. So therefore that has to be disclosed in the finance statement but not to adjust the accounts. Right. The second example, inventory, NRV of inventory. Let's say there was a stock of 31st March 2020. That stock cost was, let's say 1200 rupees was the cost. Right. We know as per LKS 2, the inventory should be adjusted cost to NR whichever is higher or lower. Lower. Right. So then after 31st March 2020, this stock is being sold at 900 rupees. Just think it over. The cost on 31st March 2020, 1200 is the cost. But you see in the subsequently, that means 1200 cost on this date. So somewhere the stock has been disposed or sold to the customer at the 900 rupees. Obviously, there is a 300 rupee loss which occurred after 31st March 2020, but still it gives an evidence on the asset existed on 31st March 2020. So therefore, this 300 rupees should be adjusted in the 31st March 2020 account itself, NRV adjustments. Right. So I hope that you are clear. Right. So another example you can remember for the non-adjusted event, declaration of dividend. What is that? The company, the shareholders propose to declare, or directors propose to declare the dividend of 1 rupee per share, but that proposal is made, let's say, after 31st March 2020, somewhere on the 15th of May 2020. It doesn't provide any evidences on the assets or liabilities which was existed on 31st March 2020, but it is isolated incident happening after 31st March 2020. So therefore, it is not an adjusting event. It is just a disclosable factor or a disclosable matter in the financial statement. Therefore, it is a non-adjusting event. Right. Likewise, I can give you 1000 example on subsequent event. What are those adjusting event and non-adjusting event? What I want you to rethink or go through the study text as well. You need to understand the logic behind the rather memorizing. මේක කටපාඩම් කරන්න උත්සාහ කරනවට වඩා එහෙම නැත්නම් මේක බලෙන් ඔළුව ඇතුලේ තද කරලා තියාගන්න උත්සාහ කරනවට වඩා මේක රිලැක්ස් එකේ ලොජික් එක හිතනවා නම් කොහොමද මේ 3:30 ඇති වෙන ඌ පස්සේ තියෙන හැම සිදුවීමක්ම අපි මූල ප්‍රකාශ වලට ගලපන්නේ නැහැ. ගලපන්නේ මොනවද? ඒ සිදුවීම හරහා අපේ 3:30 වාර්තා කරන දිනේ පැවති වත්කම් වල තත්ත්වයන්ට තවදුරටත් සාක්ෂි සපයනවා නම් රයිට් ඒ වත්කම් සම්බන්ධයෙන් අපිට පැහැදිලි තීරණයක් ගන්න බැරි වීමේ සිදුවීමක් නම් ඒ දෙක අතර ඒ 3:30 වත්කම සහ පසුව ඇතිවන සිදුවීම අතර ඍජු සම්බන්ධතාවයක් තිබේ නම් ඒක ගලපන සිදුවීමක්. හැබැයි වාර්තා කරන දිනෙන් පසුව ඇතිවන සිදුවීම මූල ප්‍රකාශන වාර්තා කරන දිනේ පැවති වත්කම් වලට වදොරට සාක්ෂි සපයන්නේ නැත්තම් ඒ සිද්ධිය 3:30ක සහ වාර්තා කරන දිනේ පැවති වත්කම සහ පසුව ඇතිවන සිදුවීම කාරණා දෙකක් කොට සැලකිය හැකි නම් අපි ඒ ගලපන්නේ නැහැ. නමුත් මූල ප්‍රකාශන කියවන ස්ටේක් හෝල්ඩර්ස් ලගේ අල්මක් දක්වන පාර්ශවයන්ගේ දැනගැනීම පිණිස යම්කිසි ප්‍රධාන සිදුවීමක් සිදු වී තිබේ නම් එම සිදුවීම ඊළඟ වර්ෂයට අදාළ වුවත් මෙම වර්ෂයේ මූල ප්‍රකාශන තුලම එය හෙළිදරව් කිරීමක් විදියට සිදු කරනු ලැබේ. තේරෙන භාෂාවෙන්ම කිව්ව ඕන. Right. So I hope that you are clear with that subsequent event. So another example, if I ask example, now let's say that I'm going to give you an example. You just think it over and tell me the answer. Now I told you the theory, but I told you the logic as well. Just try to think in over like this. Now let's say there was a court case on 31st March 2020 filed by the employees of the company demanding 100 million worth of compensation for the employee. Now COVID-19 නිසා කට්ටිය employees ලා ටික අයින් කරලා employees ලා අපිට නඩුවක් දාලා නඩුව දාලා තියෙන්නේ මාර්තු 25 නඩුව 3:30 වෙද්දී තියෙනවා. හැබැයි company එක කියනවා මේක we are strongly believing that the company will win this case, therefore no provisions are required as at 31st March 2020 කියලා කියනවා. Suddenly sometime on 20th May 2020 this is caught in the court, this case is heard and conclusion is given against the company that you should pay a compensation of 80 million to the employees. අපිට against conclusion එකක් එනවා. මේ conclusion එක එන්නේ මැයි මාසේ 15 වෙනිදා. හැබැයි මේ නඩුව දාන්නේ මාර්තු මාසේ 25 වෙනිදා. 3:30ක වාර්තා කරන දින එනකොට මේ නඩුව තියෙනවා. Now is it adjustable event or an unadjustable event? ගලපන සිදුවීමක්ද නොගලපන සිදුවීමක්ද? Right. It is an adjustable event. Why? The court case was there on 31st March 2020. It is connected to the results that has come in. If we knew these results in 31st March 2020 itself, we would have provided in the books of accounts, therefore it is an adjustable event. Another example I am telling to you. Let's say after 31st March 2020, the company is going for a major restructuring. So that means there is a huge cost invested and there is a major restructuring is coming in the business organization. That is happening after 31st March 2020. Since the company has been making losses, the major restructuring has been planned, but it is happening before the financial statements are signed off. Is adjusting or a non-adjusting event? That of course you should be aware. That is a non-adjusting event because why? That incident on the 31st March balances are have no connection. But if you think that that has to be disclosed to the shareholders to have a better understanding of reading of financial statement, of course, you have to disclose that. So I am sure that you are very clear with the subsequent event. This is the accounting standard definition on LKS 10. And I went little bit beyond accounting standard for you to explain the practicality or practical scenarios that we face in day-to-day life, right? Now this is not the today's discussion. This is the background discussion. Now we are coming to the discussion of auditing standards, right? So I request you to get the study text as well. So when you have a time, just read the study text. Right, so let's have a look at on the auditing standard discussion. This is what will be tested in your examination, right? So auditor's responsibility. Auditor's responsibility, right? So you can note down this short note and don't do any other work, listen carefully. So I will take this. So the financial reporting starting in 2019, and the financial year is ended on 31/3/2020. So this is called 2019-20 financial year, right, which we discussed. Then I am going to the auditor's responsibility. I am going to explain in a different manner or in a different time slots. Let's say this finance statement of 31st March 2020, these finance statements are sign date. I'll write here. Right. This is called finance statement signs. Right. Right. So this is a reporting date. This is called reporting date, and this is called finance statement sign date. Right. Other way around, audit report date. Right. So this is the reporting date 31st March 2020, and this is the finance statement sign date or audit report date. Then another date, let's say the finance statement issued to the public. Which I explained in the previous experiment. That's what I explained the previous one, very slow manner. It's easy for me to explain here. Okay. Now let's say 31st March 2020 is the reporting date. These finance statements are signed off by the auditor and the management by 30th June 2020. Within 3 months, the finance statements are completed and signed off by the auditors as well as the management or those charged with governance. Then, even though the finance statements are certified by the auditors on 30th June, it will not be immediately available to the public. It will take about 2 weeks time. Let's say the 15th July, right, 6th July 2020, right. Now, we learned in the previous part of the video, all these incidents happening from 31st March 2020 to any incident happening after that we call subsequent event in auditing. We call subsequent event or event after the reporting date in your accounting definition given in LKS 10. Now, I am going to discuss in this auditing standard we talk what is the auditor's responsibility. If I am the auditor, what is my responsibility for the incidents happening after this date? Let's say there is an incident on this particular date on 30th of April 2020. What is the auditor's responsibility? We are going to discuss the auditor's responsibility. And if there is an incident happening in, let's say, 12th of July, what is the auditor's responsibility, whether auditor is responsible or not. If it is responsible, what you should do. Let's say there is an incident happening after, let's say 30th of July, 31st of July, whether what is the auditor's responsibility towards to that. That is what we are going to discuss under this chapter. Okay, right. Now, in order to explain, I will divide this auditor's responsibility on events happening after the reporting date, categorized into 3 categories. Category, I would say this is part A. Part A, part B, I would say this is part C. What is that? Any incident happening in the business organization from the reporting date up to the finance statement sign date, auditor's responsibility is different. If there is incident happening from the finance statement sign date to finance statement issued date, auditor's responsibility is different. If there is incident happening after the finance statements are issued to the public, auditor's responsibility is different, right? So that is why I call you A, B, C. For you also have to put this short note properly, right? Then, now I am going to tell the what is the responsibility of the auditor on the incident happening in between the reporting date and the finance statement sign date, right? So, remember, if there is an incident happening in between these, if there is an incident happening in between these 2 dates, right, auditor is responsible. Auditor is responsible. Auditor is responsible to gather sufficient and appropriate, can you remember the word? Audit evidences. What is that? If there is any incident happening from the reporting date up to the finance statement signed date by the management and the auditor, let's say one debtor is bankrupt, fire is broken up, or let's say dividend is declared, or let's say another incident is the inventories are sold at the lesser value of the cost. Legal case, there was a legal case filed by the employees, court case solutions are given, these are called event after the reporting date. Any incident happening in this between, the auditor, now who should evaluate those incidents and decide whether it has to be disclosed or it has to be adjusted? That is not our baby, it is management baby. So management has to correctly decide the accounting treatment in line with the LKS 10. That is management job. What is our job? Our job is we need to ensure the management has properly captured the event that occurred between these 2 periods and adequately reflected in the finance statement where appropriate. As auditor, we are responsible to gather sufficient appropriate audit evidences to say that the management has performed adequate procedures and they have identified the subsequent event and those are reflected correctly in the finance statement. So therefore, we need to have the evidences, therefore we perform the audit procedures to ensure that management has properly and correctly applied the subsequent event. Clear? In performing this, in doing this, auditor has to do 6 audit procedures. This has to be remembered with you. In performing, in evaluating the subsequent event during this period, auditor has to perform 6 audit procedures. That 6 you shall remember. Right. Number 1, right, audit procedures. Audit procedures, right. Number 1, inquiry from the management, inquiry from the management and those charged with governance. You go and ask from the management whether you will have identified the subsequent events and those have been correctly reflected in the finance statement. Inquiry from the management and those charged with governance. Number 2, review the management process. So that means just try to understand what the methodology or what the mechanism, what the process that the management has implemented in identifying the subsequent event. That is the second procedure. Number 3rd one, right? Review board minutes. Review the board minutes, right? You know, when the management or let's say board of directors or those charged with governance, when they, so sometime all the important decisions, all the important incidents that is happening in the business organization or the environment are discussed at the board meeting. So board meetings are minuted by the secretary. What the auditors do, auditors without some time telling what, they ask the appointment to the company secretary or the secretary to the board and collect those minutes and just read to ensure all those are reflected correctly in the finance statement, right? Number 4th one, review interim finance statement. What is that? Review interim finance statement. What is that? When the 31st March 2020 financial year is ended, we are signing the finance statement on 30th June 2020. For that particular quarter, for the subsequent year, that particular quarter of the subsequent year, first quarter of the next year, accounts are prepared by the management. What you could do? Just simply ask those management accounts and see whether there is abnormality which could have been affected on the 31st March 2020 finance statement. We call interim finance statement of the next year. The interim accounts කියලා කියන්නේ මොකද්ද? ඒක දන්නේ නැතිවත් ඇති සමහර විට, right? Interim accounts කියලා කියන්නේ දැන් අපි හිතමු financial year එක 4 ඉඳන් 2019 4 1 ඉඳන් 2020ට යනකොට මේ සම්පූර්ණ year එකට අපි කියනවා full set of finance statement කියලා, full year finance statement කියලා. අපි මේ අවුරුද්දේ මාස 9කට accounts හදුවොත්, මාස 3කට accounts හදුවොත් ඒකට අපි කියනවා interim finance, අතුරු මූල්‍ය ප්‍රකාශනයක් කියලා. So now in these circumstances, we are going to check the interim finance statement, but that interim finance statement should be not for this particular year you are under reviewing, but the subsequent year, right? Then number 5, right? Number 6. So number 5, what we can do is we can check the legal documents, litigations. We can discuss with the lawyers the legal matters to see whether there are any legal compliances issues during that 3 months, right? So review litigations related document, review litigation related litigation details, we'll say litigation details, right? Last one, obtain written representation. So that means you are getting a letter from those charged with governance stating that all the subsequent events have been properly captured and reflected in the finance statement. So remember, these are the 6 audit procedures. So these are the 6 audit procedures that the auditor should do when auditor reviewing the subsequent event procedures from the financial reporting date to audit report sign-in date. Now close the eyes S2 වහන්න. S2 වහලා මගෙත් එක්ක මේක කියන්න. What are the key audit procedures that the auditor should do in terms of subsequent event review before the finance statements are signed? Those 6. The මතකෙන් මේක කියන්න ඕනේ මගෙත් එක්ක. මතකෙන් කියන්න ඕනේ. පළවෙනි එක මොකක්ද පළවෙනි එක? Inquiry from the management. Inquiry from the management. Number 2, review the management process. Review the management process. Number 3, review the board minutes. Review the board minutes. Number 4, review the interim finance statement. Review the interim finance statement. Number 5, review the litigation details. Review the litigation details. And number 6, obtain written representation. Read again. Number 1, inquiry from the management. Number 2, review the management process. Number 3, review the board minute. Number 4, review the interim finance statement. Number 5, review the litigation related details. And number 6, obtain the written representation. These 6 cut and write you should remember. Right? That is the number part A duty. Now you should be able to answer at the examination or any question. විභාගයට ගියාම මතක ඇතුව subsequent event එකෙන් question එකක් තියෙනවා නම් ඔය මේක online exam එකක් වුණොත් මම කරන අමාරුවේ physical exam එකක් වුණොත් මේක note කරලා කොලයක තිබ්බත් කමක් නැහැ ලියන්න කලින් මේක මතක තියාගන්න. Right? part මේක draw මේක අඳ ගන්න. අඳගත්තාම මේක වරදින දෙන ප්‍රවණතාවය ගොඩක් වෙලාවට අඩුයි. Right, this is the responsibility of the part A. Auditor is directly responsible. Right, now we are coming to the part B. I am just drawing here again. Finance statement issued. Date, so let us say it is 15th of July 2020. Right, now we have a part A, part B, part C. Now, part B mean auditor has signed off the finance statement, management has signed the finance statement, audit report has been signed by the auditor, audit partner, but finance statements are not issued to the public. What is the responsibility of the auditor? That is what we are going to discuss. Is that the auditor is responsible or not? Carefully listen to me, right? Remember, so this is the time period. Remember, any incident happening after the finance statements are signed off, but before the finance statements are issued to the public, any incident, maybe fire, bankruptcy of debtor, inventory or whatever, remember that auditor does not have a direct obligation what is that? If they are in this particular circumstances, if there is a material event happening, if it is not disclosed, it is auditor's responsibility to catch that. But if there is an incident happening after the finance statements are signed off, but before the finance statement are issued, remember that auditor does not have a direct responsibility in capturing or performing the audit procedures on the incident happening on this particular period. Auditor does not have any direct responsibility. Auditor is not responsible at all because auditor has signed off the finance statement. But මොකද්ද? එහෙම කිව්වට පොඩි condition එකක් තියෙනවා. මෙන්න මෙහෙම. Even though auditor is not having a direct responsibility, there are two circumstances auditor has to consider. One is, if management inform us there was a big incident happening, which we may have to correct the finance statement of 31st March 2020, or auditor becomes aware. Auditor හොයාගෙන යන්නේ නැහැ. හැබැයි auditor becomes aware. මොකද්ද මේ becomes aware කියලා කියන්නේ? ඔයාලා ගොඩක් වෙලාවට මේක පාවිච්චි කරනවා. මම මේක හොයාගෙන පිටිපස්සෙන් ගියේ නෑ මේ මට එක්කෙනෙක් ඇවිල්ලා කිව්වා. ඔයා ගිහලා මේක මේ තොරතුරු හොයන්න ගියේ නෑ මේක මෙහෙම කියලා. හැබැයි ඔයාට එක්කෙනෙක් ඇවිල්ලා කිව්වා. නැත්නම් පත්තරේ දැක්කා. නැත්නම් Facebook එකේ දැක්කා. Right? So that means if auditor becomes aware of an incident, auditor hasn't any responsibility to go and check on the incident happening or to perform any audit procedures, not at all. But when the auditor look at the newspaper and watch television or through any other professional way, if that information has come to your table or to your hand, then auditor has a responsibility to discuss this with the management. But auditor doesn't go behind the information and collect the information. But if auditor becomes aware, word is becomes aware. දැනගන්නට ලැබෙනවා. Becomes aware, or if management comes to know, and if the management inform us, then only the problems are starting. Otherwise, no responsibility. If these two incidents happening, then let's say if the management informs or auditor becomes aware, in such circumstances, auditor so I don't have a space here, that's what I'm writing in a small font. Auditor evaluate the impact. Auditor evaluate the impact on this particular incident, whether the incident happening here, whether that incident is an adjustable event or a non-adjustable event, or it is not an incident that should be considered at all in terms of LKS 10. Clear? If the auditor conclude that if it is an adjustable event or a non-adjustable event, or whether it has an impact to the finance statement, or the disclosure should be made, then auditor goes to the management and say that, look here, this incident you inform or I became aware, this has an impact to the finance statement of 31st March 2020, so we may have to correct now this one. So please, therefore, correct the finance statement which you have prepared, and accordingly I will issue the revised audit report. Right? We go to the and tell to the management, but sometimes management may agree, management may not agree. Press incident, management agree. Management agree. That means management agree to change the finance statement. Management agree to change the finance statement because there is an impact to the finance statement which was already certified. So then, if the management agree to change the finance statement, management will issue the revised finance statement, and accordingly, auditor will issue the revised audit report. Clear up to this point? What's happening? Auditor does not have a direct obligation on the incident happening in between these two periods, but if management inform or auditor becomes aware, auditor goes and discuss with the management and evaluate the impact to the financial statement. If there is amendments are required, you go and tell to the management there is a requirement of amending the finance statement, can you do this? If management say well good, we will do the adjustment. Accordingly, we will perform the additional procedures on the incident that happened, and then accordingly we issue the revised audit report. How you can issue the revised audit report? Because it has not yet gone to the public yet. It has not yet gone to the public. දැන් සමහර අයට මේක මේ හැරෙද්දී තේරෙන්නේ නැතු යනවා. ආපහු ගියන්න වීඩියෝ එකේ මුලට මෙතන ඉඳන් ආපහු එන්න. තොර තේරෙයි ලස්සනට. Now, auditor evaluate the impact, and there is an impact to be adjusted in the finance statement as of 31st March 2020, but the management refused to adjust. Now only problem starting. සමහර මේ අපි කියන ඔක්කොම මැනේජ්මන්ට් එක අහන්නේ නැහැ. ඔඩිටර්ස්ලා කියන ඔක්කොම අහන මැනේජ්මන්ට්ලා ලංකාවෙත් නැහැ ලෝකෙත් නැහැ. සමහර දේවල් අහනවා සමහර දේවල් අහන්නේ නැහැ. මොකද lot of practical problems are there. So now management does not agree. Management does not agree. Management doesn't agree. What you can do? If the management does not agree, then you have to see two circumstances, right? If management does not agree, one circumstances, if finance statements are not issued, follow me correctly, I can't write here everything, right? If management does not agree, but even though auditor has signed the finance statement, those are not given to the management yet. You got my point? Management එක කියන අපිට මේ accounts වෙනස් කරන්න බෑ කියලා. හැබැයි luckily auditor ගිහින් බලනවා මේ තාම accounts අස්සම් කරනවා තාම management එකට දීලා නැහැ. Very simple. Change the audit report. If they say can't mean change the audit report, that's it. If you tell them to correct the finance statement, if they say can't mean you have signed the audit report but not given to the management, change the audit report, right? Accordingly, if the finance statement are not issued to the management, change audit report. Right? What's going to happen? If management does not agree, if the audited accounts are not given to the management, you change the audit report and give the account. That's it. Your responsibility is finished. But the situation is coming here like this. Management does not agree, but we have given the accounts to them as well. Now accounts with them. So in these circumstances, audit partner has put his signature and the accounts are given to the management to proceed further. Now in between this you come to know an incident that could affect the finance statement of 31st March 2020. The changes are required. In such circumstances, what you can do now? You can't do anything. You can't do anything. Why? You have given the accounts. Next circumstances, if finance statements are issued, you can't do anything. But you can do one thing, right? This is, look at here this word. Seek to prevent reliance. What is that? Seek to prevent reliance. There is something called auditor can take action. Seek to prevent reliance. So that means auditor has signed off the finance statement, but before issuing to the public, auditor has noticed this finance statement should be changed. Management does not agree to change the finance statement. Auditor does not have any hold in the hand, anything to be done. Only available weapon is auditor can issue a public notice through the newspaper or any other public media stating that don't rely on this finance statement. The newspaper that I am taking as example, standard says seek to prevent reliance. Auditor can issue a notice to the public, don't rely on this finance statement because of this reason. Finished. එම වෙලා නැහැ ලංකාවේ ලෝකෙ කොහෙවත් ලෝකේ නම් වෙලාදී ලංකාවේ නම් එහෙම වෙලා නැහැ. එහෙම ඉතින් කරාට පස්සේ ඒ කවුන්සලින් වැඩකුත් නැහැ නේ. එහෙම වෙන්නේ නැහැ සාමාන්‍යයෙන්. But it is there in the provision. What is that? Seek to prevent reliance action can be taken by the auditor if the management does not agree to change the finance statement in the circumstances that the finance statements are issued to the management by the auditor. I hope that if you just look at only these circumstances, you won't understand anything, but you have to come to the nicely this flow you have to come. When you come this flow, you will understand what is correct and what should be the answer. This is called logical auditing. Rather, memorizing This trying to understand the logic and remembering will help you to get through the examination, right? So we call seek to prevent reliance. I am using a small font because I can't write there, the board is not enough. Now very clear, part A we discuss very clearly what is the auditor's responsibility. Part B we discuss in clearly what is the auditor's responsibility, right? Then we are coming to the part C. The part C circumstances coming like this. It's very nice. What is that? Reporting date is 31st March 2020. Audited finance statements are signed by the auditor by 30th June 2020. Finance statements are signed. All the subsequent events are captured and correctly reflected in the finance statement. The next incident happened. Then finance statements are issued to the public on 15th of July 2020. There were no incident captured by the auditor. Now, after finance statements are issued to the public, those finance statements are, if it is a PLC, available in the Colombo Stock Exchange. If it is a non-PLC, they might be uploaded to their website, or it may be available in the registrar of the companies, or it may be available at the Inland Revenue Department. The various stakeholders are in. Those are issued to the public for many places. Bank, stakeholders, bank, government institution, public, many. But unfortunately now, after finance statements are issued to the public, some incidents are identified by the management. Auditor becomes aware. What is your responsibility? Only we are discussing, right? Same rule is applicable with minor changes. I am telling you, right? In the same here also, no direct obligation. No, I am not writing everything. No direct obligation. Same thing. This incident, this side also, auditor does not have a direct obligation. This incident also, auditor does not have a direct obligation. But same like previously, but if management inform or auditor becomes aware, you see, same way, no direct responsibility. If management informs or auditor becomes aware, right, then auditor evaluate the impact, right. These circumstances, if the management come and tell කළමනාකරණය අපිට කියන්න පුළුවන් නැත්නම් auditor පත්තරෙන් දකින්න පුළුවන් නැත්නම් මොකක් හරි දකින්න පුළුවන් වෙන මාධ්‍යයක් කරහා හැබැයි ඒ දකින්න සිදුවීම හරහා ඒ සිදුවීම වාර්තා කරන දිනේ 3:30ක පවතින මූල්‍ය ප්‍රකාශනවල යම් බලපෑමක් සිදු කරන සිද්ධියක් වෙනුනේ හැම සිදුවීමක්ම නෙවෙයි. ඒතර එහෙම වුණොත් එහෙම හැබැයි සිදුවීම් හොයාගෙන යන්න ඔඩිටර් කිසිදු වගකීමක් නැහැ. ඒතර එහෙම කවුරු හරි කිව්වොත් හරි නැත්නම් මැනේජ්මන්ට් එක ඉන්ෆෝම් කරොත් හරි නැත්නම් දැනගන්න ලැබුණොත් හරි ඔඩිටර් එහෙම වුණොත් මේක ඉවැලුවේට් කරලා බලනවා. මේක යම් කිසියම් බලපෑමක් 3:30ක මූල්‍ය ප්‍රකාශන වලට තියෙනවද කියලා. If there is an incident, then you go and tell to the management, look here, you have issued the accounts to the public, so now you have to correct the finance statement. Then තමයි ප්‍රශ්නේ. correct කරන්න කියලා කියනවා. හැබැයි already accounts public එකට ගිහින් තියෙනවා. දැන් තව accounts එකක් දැම්මොත් එහෙම it's going to be a problem. One company, two accounts in the public. Right? So how to deal now? If management agree, remember this, right? If management agree, this is the key change. If management agree to change the finance statement, and if the auditor also happy, the management issue the revised finance statement, auditor also issue the revised audit report, same as this. But there is a key change there. In these circumstances and these circumstances, there is a key change. What is that? Auditor has to avoid the confusion among stakeholders. දැන් එක audit report එකක් ගිහින් තියෙනවා තව audit report එකක් දැන් එනවා. දැන් shareholders ලා බලයි මොන එකද කියවන්න ඕනේ. දැන් දෙකක් තියෙනවානේ. මොකද්ද හරි මොකද්ද වැරදි දන්නේ නැහැ. So therefore when auditor issue the revised audit report on the revised finance statement based on an incident that is adjusted in the finance statement, auditor has to incorporate an additional paragraph into the audit report stating this scenario. What happened? අපි කලින් මෙන්න මෙහෙම report එකක් දුන්නා, මෙන්න මෙහෙම සිද්ධියක් මතුවුණා, මෙන්න මේ සිද්ධිය නිසා අපි මෙන්න මේ මූල්‍ය ප්‍රකාශන සහ විගණන වාර්තාව අලුත් කරා. විශේෂයෙන් මේ සිදුවීම එකතු කරලා auditor has to add an additional explanatory paragraph. We are going to learn in the next webinar, audit reporting, how to put such a statement. There are two types of statement. One is emphasis of matter, one is other matter. That I am not going to tell you now. We will be discussing in the next webinar. Emphasis of matter or other matter, right? So the key change here, all these are applicable here as well. All these are applicable here as well. Part B and C, what is the key change? The key change is when you are issuing the revised audit report here, no additional paragraph. But here, when you are issuing a revised audit report, explanatory additional paragraph should be in the audit report. It may be emphasis of matter or other matter. I will explain those later. That is the key change with compared to B and C, right? So therefore, if the management agree, right, if the management agree, we call revise audit report with addition, I can't write here, note down in your note, additional paragraph, right? What's going to happen here? If management agree and they will change the finance statement, auditor will issue the revised audit report with an additional paragraph, right? That is the key change in part B and part C, right? In the next circumstances, if management does not agree, if the management does not agree, only one solution is there. What is that? Seek to prevent reliance action should be taken by the auditor. Seek to prevent reliance action should be taken by the auditor. So I couldn't write properly here. Right. I'll just quickly summarize within taking 2 minutes. This is the financial year 2019-20 that is audited by the auditor. But of course, audit report cannot be dated as 31st March 2020 because it takes some time to complete the audit. Until the audit is completed and sign off the finance statement, auditor is responsible to perform the audit procedures to gather evidences to ensure that the management has adopted a proper mechanism or management has identified and disclosed the event after the reporting date in line with LKS 10. By doing so, there are 6 audit procedures generally given in the standard number 560 that the auditor should do. Right? That's clear. That 6 I told you to, so you should remember that 6 audit procedures. Then, if there is an incident happening after the financial statements are signed off by the auditors, but the finance statements are issued to the public, මම මේක කිව්ව පැහැදිලිව ආපහු මම කියනවා accounts අස්සම් කරන දවසයි public එකට දෙන අතර gap එකක් තියෙනවම තමයි. අස්සම් කරපු දවසෙන් public එකට දෙන්නේ නැහැ. ඒක මොකද ඒකට process එකක් තියෙනවා, formality එකක් තියෙනවා companies act එකේ. මේ කාල පරිච්ඡේදයේ if there an incident during this period, auditor does not have a direct responsibility, but if management informs or if the auditor becomes aware, then the auditor is evaluating the event and to see whether there are impact to the finance statement. If there is impact to the finance statement and informing to the management agree on to that and accordingly change the accounts and issue the revised audit report. In case if the management does not agree, there are 2 circumstances. Look whether the accounts have been given to the given to the management. Then මෙතන auditor අස්සම් කරාට තාම audit report එක firm එකේ වෙන්න පුළුවන්. මම දීලා නැත්නම් ඕම ටක් ගාලා හෝල් කරලා audit report එක වෙනස් කරන්න. In case if that has been given to the management but management is refusing to change the finance statement, We don't have any other option, only option available is to take in action to seek to prevent reliance. ඒ කියන්නේ මේ මූල්‍ය ප්‍රකාශන විශ්වාස කරන්න එපා කියලා පබ්ලික් එකට දැනුම් දෙන්න මොනවා හරි නීති අනුකූල ක්‍රියාමාර්ගයක් විගණක විසින් ගත යුතුයි. ඒක මොකක්ද කියලා විගණන audit standard එකේ නෑ. That has to be decided by the audit firm, auditors using the code of ethics requirement and additional guideline given in the CA Sri Lanka. Right. Then there can be situation where the finance statements are signed by the auditors and also issued to the public. Now it has gone. Then again, auditor does not have a direct responsibility or a direct obligation towards to the incident happening. But if the management inform us or the auditor becomes aware, then the auditor is going to evaluate the impact of the finance statement, whether there is an impact to the reporting date of finance statement or the finance statement prepared on a reporting date. In such circumstances, auditor evaluate and see the impact. If there is an impact, then you are going and discussing with the management and requesting management to change the finance statement. If the management agree to change the finance statement, well and good, and auditor issue the revised report same as this. But there is a key important change. In these circumstances, since it has already gone to the public, the audit report should contain additional explanatory paragraph explaining this issue. It could be either emphasis of matter or other matter. කවුරු හරි මතක තියාගන්න ඕන නම් මේ part B එකයි part C එකයි මේකේ තියෙන key change එක ඔච්චරයි. Key change එක ඔච්චරයි. The second circumstance, if the management does not agree and management say we can't change now, the finance statement has gone to the public, then anyway the audit report has been issued to the public, so therefore no other alternatives except seeking to prevent reliant action. Right. I am sure that you are clear with that. In a very simple and a very basic way I explained this theory rather going through the slideshow. I was thinking to explain through the slideshow, but I think this is more, you are more familiar with this methodology using the whiteboard. So I hope that you are clear with these three circumstances. If there could be a question from your question in your examination, definitely you can answer. I am sure you can answer if you understand properly. So quickly we will look at one or two questions before we can discuss more question in your revision discussion as well. Question discussion, revision kit question number 15.3. 15.3, if you read the question, which of the following statement describe the auditor's responsibility for events occurring after the year end but before the date of the auditor's report? දැන් බලන්නකො මේක. දැන් මේ theory එක හොඳට මතක තිබ්බනම් අපි ඔයා හොඳට අහගෙන හිටියානම් මේ ප්‍රශ්නේ මේ ABCD හතර උත්තර ඕනේ නැහැ. උත්තරේ හිතා ගන්න පුළුවන්. Read the question again. Which of the following statement describe the auditor's responsibility for events occurring after the year end but before the date of the auditor's report? ඒ කියන්නේ reporting date එකයි audit report එකටයි අතර ඒ කියන්නේ part A, ABC එකෙන් A. Then the auditor has no responsibility to consider the event that have occurred after the year end. Is it correct or wrong? Of course it is wrong. Part A, auditor has a responsibility. I'm part A කියලා කිව්වේ මම මේ මගේ diagram එකේ. Part B, section answer B, the auditor only has to consider adjusting event because non-adjusting event do not need to be reflected in the finance statement. No, auditor has to consider both the events. The auditor is responsible for carrying out procedures to obtain evidence that all events occurring after the year end and before the date of the auditor report which need to be reflected in the finance statements are identified. Of course, it seems to be a correct answer, but we'll read the part D also. The auditor only has to consider events occurring after the year end which occur between the date of the audit report and the date of the finance statement are issued. Of course, it is a wrong statement. Why? That means they are talking about according to our diagram B section, but you know that B section auditor does not have a direct responsibility. So therefore, this is a very clear-cut answer. If you know the theory, straightforward answer. Even though මේ ප්‍රශ්නේ පොඩ්ඩක් දිග වැඩි වුණාට මේක හරි ඍජුව උත්තර ලියන්න පුළුවන් ප්‍රශ්නයක් theory එක හරියට දන්නවා නම් ඒ නිසා උත්තරේ part C. Then the revision kit question number 15.2, which of the following would be an appropriate audit procedure to identify which would not be an appropriate audit procedure? You see, which of the following would not be an appropriate audit procedure to identify subsequent event which may require adjusting or a disclosure? Right. Part A review of board minutes from the start to the period under review to the date of the audit. Review management accounts for the period under review. Review legal correspondence up to the date of the report, date of the audit. Inquire of management whether there has been any reason damaged to or sale of assets. Got the question? Which of the following would not be an appropriate audit procedure? To identify subsequent event. අර හය මතකද? දැන් මගෙත් එක මතකෙන් කියන්න බලන්න. පළවෙනි එක මොකද්ද? Inquiry from the management. Number 2, review the management process. Number 3, review the board minute. Number 4, review the interim finance statement. Number 5, review the litigation related document. And number 6, obtain written representation. දැන් ඔය හයෙන් මේ අහන්නේ ප්‍රශ්නේ. Which of the following would not be an appropriate audit procedure? Which, now you have to have a logical understanding and common sense. Would not be an appropriate audit procedure. Number 1, a review of board minute from the start of the period under review to the date of the audit. හරිනේ. audit එක කරන දවස් දක්වා තියෙන board minute review කරන්න ඕනේ. ඒක start date mainly subsequent event සම්බන්ධයෙන් අපි කතා කරනවා නම් ඒක වෙන්න ඕනේ reporting date එකේ ඉඳන් audit report date එකට. හැබැයි දැන් මෙතන කියලා පටන් ගන්න දවස් ඉඳන් බලන්න කියලා. ප්‍රශ්නයක් නැහැ නේ. Then B, review management accounts for the period under review. I have a question mark on that. That also seems to be a correct answer. Let's say review the legal correspondence up to the date of the audit. Yes, legal correspondence number 5, which we discussed. Inquiry of management whether there has been any recent damage or sale of asset. Inquiry of management, answer number 1 in our our list. So therefore part C and D also seems to be correct. Part A also correct. Part B also correct. ඒ දෙකත් section B එකත් හරි වගේනේ. Review management accounts for the period under review. හරිනේ. අපේ එකේ තියෙනවනේ හතරවෙනි එක. කියවන්න හොඳට කන්නාඩි දෙකක් දාලා කියවන්න වෙනවා දැන්. Review management accounts for the period under review. දැන් මේ management accounts බලන්න ඕනේ මම ඇදලාම පෙන්නුවා මේ බෝඩ් එකේ දැන්. මේ management accounts එක බලන්න ඕනේ ඒ අවුරුද්දේ management accounts ද whether we should see the finance statement up to 31st March 2020? No. You have to look at the management accounts of the next year interim finance statement. එතකොට මේ review the management accounts for the period under review. කියන්නේ අපි period කියන audit කරන කාල පරිච්ඡේදයේ management accounts එක බලන්න නෙමෙයි අපි කියන්නේ. audit කරන කාල පරිච්ඡේදයෙන් පස්සේ එන interim finance statement තමයි බලන්න ඕනේ. ඒක නිසා මේකේ වැරදි උත්තරේ තමයි answer B. Review the management accounts for the period under review. Right. So with that we are finishing the discussion of the subsequent event. So that is part A. Now we will move to the next to discuss the part B of the audit finalization, that is going concern.